Hi traders, Nathan Bray here from ACY Securities. Let's have a chat about the interest rate and monetary policy announcements coming out around the world at the moment. So this morning we had New Zealand. New Zealand Reserve Bank has come out and continued their aggressive stance by raising rates for the sixth time this year, 5 of which have been 50 basis points. So they did a 50 basis point raise today to fight this evil, ever-strengthening inflation. So they're up to 3.5%. However, when they did this, we saw the New Zealand US dollar shoot up on the news. However, it sold off pretty quickly. And the last 6 times they've raised rates, we have seen a similar scenario with the New Zealand dollar initially going up, and then over time it's certainly selling off to be a lot lower than it was at the start of this year. And we're seeing this downward trend. However, yesterday, we've got a similar inflation scenario here in Australia. Now, the Reserve Bank of Australia has taken its foot off the pedal a little bit. So it's now raised only 25 basis points to 2.6%. So 2.6% on this side of the Tasman versus 3.5% at New Zealand. So we're in a situation in Australia where they've changed their stance from being really aggressively wanting to fight inflation. Now, why are we fighting inflation? Because everything is costing everybody more money, okay, over the basket of products. This is affecting every single Australian and every single person in New Zealand, and not only that, around the world. But our Reserve Bank is only raising 25 and now talking about fighting inflation over time rather than needing to do it straight away. So we see that as a sign of weakness. Now, we got an initial move up in the Aussie against the US dollar, but it really has started to sell off. In fact, it's not liking that 65 cent level at the moment. So we're keeping an eye on that. The trend on the New Zealand is down. The trend on the Aussie is down. And the strength of our monetary policy is now starting to ease a little bit, and we're starting to talk about using a longer time frame. Now, all of this has happened off the back of a few days ago in the UK. So the United Kingdom has turned around. They're in a worse position. So they've got inflation up around 10.1%, and they're raising rates aggressively. However, they've turned uncle in a way where they've turned around and said, listen, what we're going to do is start quantitative easing now because we've got some problems in our bond market, okay, in the pension funds. So we're now seeing these worldwide governments turning around and saying, listen, we're going to fight inflation and kill this beast off aggressively, to we're taking the foot off the pedal in Australia, and we're also now quantitative easing, which is inflationary, to try and save some pension funds. So we've got a change occurring, and we're also in a position where we saw a huge sell-off on the pound US dollar. Now, while they're quantitative easing, we're seeing a lot of these, the easing moving into stock markets temporarily, potentially around the world. So we're starting to see this move up. And is this going to be very dangerous for us fighting inflation? Will inflation now be aided by the fact that they're quantitative easing, which in effect is putting your foot on the accelerator whilst putting your foot on the brake whilst raising interest rates? This does look very negative. So at this stage, we do have a stronger US dollar. I mean, after the midterm elections, are they now going to turn around and potentially take the foot off the accelerator or do a complete pivot? They're the things we've got to look at. Whereas at the moment, we've got some weakness coming out of New Zealand, we've got weakness in Australia, and we've certainly got some monetary weakness coming out of the UK. So looking for these trades in line with the longer term trend. That's all from me. Good luck with your trading.